When you lose your money, you lose nothing. When you lose your health, you lose something. When you lose your character, you lose everything. Remember that.
Magandang umaga, magandang hapon o magandang gabi. Di ko alam kung umaga ba, ang hapon, o gabi kapag pinapanood ito. So I greet you in Tagalog to start off our view looking into the week ending February 28th, and the reason being that I don't know if it's morning, afternoon, or evening when you're watching this because I am not sitting there next to you. But I kind of wish I was, because I'm starting to see a lot more Filipino in the room. And what I mean by Filipino is, even though somebody makes it simple for you and tries to break it down to where it's as effortless as possible, you still bring in the American and you fuck it up. You fuck it up.
Don't fuck it up.
I kind of lost because it's, 4 o'clock in the morning. I've been here in front of the computer since about 1:30, getting updated, going through the chat. I've actually sent a couple of you private messages because I'm asking, are you seriously that fucked up? So let's get started here. Opex week ending February 21 watch, as everybody had the email and the video, and we were discussing here about, the negative divergences and the this and the that and everything else, and I made it as big and as bold as I possibly could about the February 21 weekly 6120, 6115s to be a little bit on the safer risk side for a red week, but then I don't know how many times I highlighted what the significance of that 6075 is for those that don't know what it is because you weren't here for all of February, January, and December. But there you go. Your February 21, 6080, 6075 calls, $4, $4.50 credit. Everybody and their mother got $4.50 credit. And then pointing it out there again on Tuesday as we got started in the week, how we had that February 28th, the gap up at the very beginning of the week, have not reached the all-time highs over there. Again, looking at trades for the 0 DTE, looking at the 1 DTE, looking at the weekly calls, and there again you have your significance of your 6075. Come on there to the VIX expiration and explaining Opex. I actually had somebody tell me that, oh, okay, I understand it now, Opex. This is the week where they report operating expenses. I'm not laughing at you. I'm not. But this is where I'm starting to lose my character, where we went from an audience that was so well-oiled and perfectly working that all of a sudden we got these one contract newbies come in, one contract, and everybody's fucking worried about that one contract and coming up with these new fucking iron butterflies and, okay, well, I'm doing this, and why is this happening? And I tried everything that I fucking could to explain it to you in the simplest of simple ways. Not only it being Opex and it was going to fuck you all up, not only the weekly candles of how everything is, but again, when here on, before I left to go to my doctor's visit and explaining this in the video, you look at your times, you look at your time frames, you look at where everything's at, and it is all cohesive. But again, having pointed out 6075, and I apologize for dedicating a day to my own health rather than being there in the chat room with you to remind you multiple times over and over about the significance of 6075. You're $300, $400 per contract. $6,400 at the end of the day there on Friday. And again, with the 60-80, 60-75 bullish or bearish call credit spread ending the week in the money, it goes in and again just brings you back into the whole what's going on. Where are we? Well, here's February. Oh, fuck! That $3, it failed. Ah, that other one, it failed. That one failed. Failed! We've got 18 wins, 4 losses, 81% win ratio.
Help me! Help me, Rod. Help me! Help you. Help me. Help you. Help me. Help you.
You got a 900% trade there on Friday. 2 900% trades there last week after the big CPI gap down. And you had the 900% on CPI itself. And then you come over and you sit here, oh my God, what do I do? Well, you know what? I'm done with the whole fucking milk in my titties thing, because you literally need to go over and look at, go listen to Coldplay Fix You, because that's kind of the theme of what we got going on here. And when I try my best and I don't succeed and I'm not getting what I want, you know, I'm getting, yeah, I got in at, you know, $4.50. I got out at $4. I made my 50 cents. That's not what I want you to receive. I want you to be able to change your life. I want you to be able to go into work and tell your boss, fuck you, I quit, and walk out, and be able to go and look at your wife and your kids and have that confident look in your eyes when you tell them, we're going to be fucking happy. I want that to be there. And I feel that this is exactly what the doctor told me. He goes, dude, look at your eyes, man. When was the last time you fucking slept properly? And that was better than fucking 2 years ago. So, anyway, you got your 900%. You got your 150% on the other one. You came down. Where did you come down to? Oh, my God, you came down to 6,982. Almost fucking perfectly. But what do you have now? You got 2 red closes in a row. You don't have a third red close. However, you did get that minus 1% move there on Friday. And as I pointed out to you multiple times over and over again, when the SPX produces a minus 1% day, the subsequent session, the session that is next, is a plus 1% day. If not, a minimum plus 1% bounce off of the low of the day or the overnight low prior to the subsequent trading session open. You saw this happen on CPI last week. That was where your 900% trade, where are we, came last week, was because of that big minus 1% move. The next day, what did you get? Exactly plus 1%. When you don't get plus 1%, 60.86, where did we get to? 60.73. You go look at the overnight low after the jobs report where we got the minus 1% 2 weeks ago, and there's your plus 1% off of the overnight lows because you had that whatever the fuck tariff gap down. That was the week where I went berserk after the email went out. Coming over and looking over at things though, nothing happened. QQQ. Yeah, Opex. Big, major fucking sell-off there. What? You got your red week. You got your minus 2%. You came right down to 526. Ooh. IWM, though, this is a different story. IWM, you broke down below 220. Now you have 2 red weeks in a row, and IWM is your tell factor, well in advance of the SPX. However, you do have your 3 red closes in a row. 3 red closes in a row over on the IWM. You go back as far back as you want to go. You go back as far back as you want to go. Finding 4 red closes in a row on the IWM is almost as difficult as finding it over on the SPX, where the SPX you only have 3 red closes or 2 red closes in a row right now. So the significant thing about figuring out this video game and looking at every different piece of this engine that puts it all together, this is now something that I can finally start tracking. I've been waiting for this for months. The SPX closed on Friday below greater than plus 20% year over year. So meaning where we were roughly February 21 or roughly the 34th trading session of 2024, we have now broken down below being greater than plus 20% from that. And I want to watch how the algorithm reacts to this because it will be a very big assistance for me when I am looking at it in terms of the Elliott wave as well as multiple other factors. But yeah, guys, I mean, I really, really, really am trying to fucking get you sorted out. And when I went back to look as to why the market dropped on Friday, having started perfectly right below that 61.16 unbreakable resistance during the course of the week, which was why, again, going back to Thursday, so many people were all freaking out about their one contract that they had $3, $4 credit on, and they were, oh, what do I do? What do I do? What about my April QQQ puts? Should I close my April QQQ puts? Should I average in?
Stop being a bitch and come on.
So anyway, I look back and try and figure out what was the catalyst as to why we broke down, and this is what I find. This is exactly why we broke down there on Friday. 9:36 a.m., just after the opening bell, Trudeau, after Canada Hockey win over the United States, says, you can't take our country and you can't take our game. And the Americans said, oh yeah, watch this, we'll fucking sell the market off, because that's the only thing we can do. But that's the only catalyst that I see there for Friday, other than the fact that, quite obvious, we were looking for a red week. It was Opex, and where did you come down to? 6,982. So enough about that shit. Here, again, it was there. I should never have gone to the doctor. Never, ever, ever will I ever go to the doctor again. I would have been able to give you, hey guys, 60.75. Anybody remember it? It's $3 here. Instead, I see people that have been with me for years talking about, hey guys, let's buy some 61.10 calls. So that's where you're at with that. I'll leave that alone. So here is Weekend Wall Street. Weekend Wall Street is a very respectable, but not so accurate to the penny. But here you go. Dow Jones gapping up 71 points. We'll look over on the SPX. I haven't updated this because, and it's not really that fantastic with the SPX. The Dow Jones is more accurate. But you're down less than a quarter of a point on the SPX looking at the futures. The NASDAQ, last time I looked, was looking at down minus 21. We are right now, yeah, the same thing. Because again, it doesn't update that much. But here on Weekend Wall Street, this was a little bit lower earlier or a little bit higher earlier, but again, you don't see any significant sell down coming to you over here. So bring on to the charts. Here we are, SPX. Looking at my detailed chart and going all the way back to Friday last week. Nowhere. Again, 61.16, just kept holding. You got your little spike up there on Tuesday. That was kind of where things a little bit changed as far as my view went with the full moon. Back again, supporting 61.16. Oh my God. And then your two little gap downs, which I haven't marked these here, but yes, we do have gaps that are unfilled. I will change the color later. Or actually, I'll just do it now because, you guys are wasting my time by not following instructions and making it easier. I'll waste your time by color coding what I got going on here over here on the charts. But guys like Rick, guys like Keith, these guys are John, Mike, Nancy called me. She was bitching and complaining about, the sudden newbiness in the room of people just absolutely panicking. You got your two little gaps up here above. Two little tiny gaps, obviously to be very well respected, very well looked at, very well acknowledged, and at the same time, we'll get into that in a little bit, but where did you come down to? You came down to on Friday, right to 6,982. I mean, you really can't make it that much clearer, and when you look here just on your Friday, what happened when you got to 60.75? What happened? You got your little stall there. You got your little, oh God, yeah, let's go buy 6,100 calls. And then later in the afternoon, you had your complete sell-off right down to 6,982. It's a video game. Out of that video game, nothing happened. Nothing happened other than Opex. Nothing. 6,003 being the low from last week, which will be your first little bit of a test. Obviously not breaking down below 59.90 at all as of yet. Here you are. What is very clean looking as an ABC with the B wave or the C wave coming down not only to the 61.8 retracement, going back to that February or the January, the February lows, 59.23, but right to that 6,982 and virtually perfect right to the 161.8 extension. An A, a B, and a C. So do you get a wave 4 bounce? Where do you get a wave 4 bounce to before a wave 5? I really wouldn't spend that much time and effort into it because, again, having spoken and tracked and shared this for multiple days in a row, looking for that perfect visit to 61.70 on the futures, didn't get it. Only got 61.6650. And where did we drop down to? We dropped right down to 60.20. Right to it. It's a video game. There is nothing real about what we're doing here. Come over onto your SPX in the full moon. As of now, I am still keeping this here at 6,003. That's where I'm at because, number one, we haven't broken 6,003. We would need to for me to be able to move this over here. But as of right now, I'm still sticking with that 6,003. And it's, again, it's an art. It's not a science. But at the end of this week, what we have is the new moon. The new moon will be placed at the end of this week as it comes on February 28th. So end of this week, beginning of next week, that's what we're looking at. And you have your catalyst for this week. Your catalyst being, not only do you have Domino's Pizza reporting on Monday. You got Home Depot on Tuesday. AMC. Lowe's is insignificant, but what you have here on Wednesday after the close is NVIDIA. And this is going to be your major catalyst for the week, along with Friday PCE. That's where you're at. NVIDIA on Wednesday, PCE on Friday. So, what we have here now with our new moon coming at the end of the week, again, it's an art, it's not a science. We look over onto our QQQ and the bounce coming on QQQ off of the August bottom to see the big broad view. Where did we come to? We did not come to the 50-day moving average. We came to the 50-day moving average on the SPX. We did not come to it on the QQQ. We're close. But, bring you in here so you can see it zoomed in and your big drop there. Boom, 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 boom. Take off the 200-day from this view because it's insignificant, and take off the 100-day because it is insignificant. And there's your move down from your high there on Thursday, your big gap up here on Friday, and then your kaboom. And where do you come to? Roughly the 161.8 extension, almost to that 50-day moving average. Look over onto the detailed chart, and yes, we got back down below that 528.61, which was where I continually got short, using it 8 times now since December. And we barely come down to 525. We barely come down to the 50-day moving average, and we are not in any way, shape, or form threatening 521. As of now, NVIDIA doesn't report until Wednesday after the market close. Come on to the Dow Jones, and the Dow Jones finally made a little bit of a move. Finally filled this gap over here, which is from January 17th. Jesus Christ, this was there forever. We got rid of that gap, and we started to get into a little tiny gap here, again, from January, where's this? Yeah, January 17th as well. The 50 retracement, down to the lows, down to the big sell-off onto January 13th. 50 retracement, down into this 438 area. We're still not breaking down aggressively, but you can see here we've broken the 50-day, come right into the 100-day. So, is it the beginning? Very, very possible. However, we're extremely oversold. Over on the IWM, this gap has finally been filled from back here in January 14th, so we can remove that. On Friday, you had a big gap up, and you have a fake print as well, something we're going to be talking about during the course of the week. And we came right down to both the February tariffs, the 200-day moving average, and like I've shared multiple times going back, it is very, 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 very difficult to get that IWM below 220, and that's where we're at. So where this bounces to off of the IWM, I would start looking at this as a lower resistance and start looking more aggressively at seeing something like the 224 area, more so the 227, which has been consistent as where your new get short level is. Get long, up to you. You want to play the 10 points to the upside. So again, on the SPX, you broke down, but let's go and look at the internals of the SPX, because what'd you do on your VIX? You Bucky fucking Larsoned. You had this, and you did absolutely fucking nothing. Back over here to 1811, you did nothing. There was absolutely no follow through whatsoever on the aggressive downside. So again, going back to it all, you had an Opex dip. That's all that you had, was an Opex dip. So I bring you over to finish this off at your big wide picture of your main components in your QQQ. Here's your Google, your all-time high on Google, your breakdown not only below the 2024 close, but not only below the April 2024 earnings spike high, but we are now into this gap from back here in December, pushing on to minus 15%. And as you can see, the 200-day is coming very close. So call it 4 points to the downside, and whether you like it or you don't like it, the 200-day moving average is going to come into play, and that's about the most that you're going to get out of Google for now. But from 209 down to 179, minus 30 points, ain't nothing wrong with that. Come over onto your Apple, and as you can see here, Apple getting right back up into this unfilled gap, trying to go green on the year, but not having too much success with it. But as I've noted out here in the gray zones, because this channel that you've been trading over here on Apple, 250, 248 resistance, 228, 225 support. As you can see, 50-day got broken back up above. So 240, where the 50-day is. Again, Apple closed down minus 0.28, minus 0.11% there on Friday. Apple had nothing to do with what was taking place there on Friday. Shows you it's not a market move. Individual names being Opex. Here's your Meta. We are finally starting to get a nice move down on Meta. And this gray zone here that I have is what I'm anticipating to see on Meta. Down here below 600 in that 600, 550 area. That's my personal expectations on this absolute piece of shit that people use called Facebook. McDonald's, nice little bounce after having that dip. Everybody was able to scalp off the trade if they wanted to, up 50%. Me, I still like my gray zone. I still like my 286, my 282 area, with the 200-day moving average being right down there at 282. Still got a month and a half on that. That's the view that I have. PLTR, nice start. Nice little dip down there, down below 100, down into 95. Now we'll see if we can get a little recoil and follow through, because again, I want this gap completely filled back there to 83, 82, and I want to start seeing some pressure come down here into this lower 75, 70 area. Come on to Tesla. Tesla, like I said, warning zone about this area down here, 325, 313 for a bounce. You got a nice big bounce off of Tesla, but now you are starting to get that recoil. And that recoil for the move down, very, very, very possible that you could be seeing Tesla down there below 300, down in this 250, 260 area, quite possibly even back down into the 240, 230 area. I'm not calling it, but you still have that big Trump gap that's unfilled, and the whole Doge thing is starting to, kind of wear off. Amazon, new all-time highs back here in the beginning of the month. Here we are, right back down to the Trump win, 215.90. 50-day moving average broken, 100-day moving average coming into contact. But on Amazon, with Jeff Bezos selling all of his shares around 200, I still see that 200 area as being a highly likely area to be visited. And as you can see on your move to the downside, there is no structure. There is no dip, bounce, dip, bounce. This is still in just fade-off mode. NVIDIA, this is where it's all at. And this is where the big picture is going to be, with it having filled your deep seek gap over in the course of the week. So we can remove that. This is your big picture on NVIDIA. This is the big, broad, wide picture of NVIDIA. And being here at this resistance area at that 140 and having that little dip come down off of it, again, big, broad, wide picture on NVIDIA, you got to get that 120, 115 area. You get that 120, 115 area, you got a really strong opportunity to start pushing down on that 95. And when you go look at its little brother over here with AMD, that I've seen some people ask me about buying calls on, AMD is minus 50% from its all-time highs. And you look coming off of the all-time highs here from back a year ago in March, there is no buy the dip. Not since, what was this ending here, in October. Since October, this has just been in nothing but fade-off mode. And you are starting to approach back here the Israel invades Gaza lows, back here down below 100. So be very careful with that. Come over and look over on your SMCI, the other ugly brother, stepsister. This is due to be delisted this week. NVIDIA, all involved. The SMCI, all involved. Wednesday, we get NVIDIA reporting. I can't stand NVIDIA. I can't wait for it to fall apart.
And NVIDIA has been the single worst company we've ever dealt with. So NVIDIA, fuck you.
And then you have your Netflix. Your Netflix here thought 1,000 was going to be the spot. Thought that was going to work, the 1,000, but it had other decisions. But that moved back up above there, which, again, I don't have any Fibonacci's above 1033. It's been coming back down to 1,000 pretty consistently recently, but nobody trades Netflix anymore, and Netflix is one to essentially just be paying attention to, because with Netflix, it, as non-volatile as it has been, it's just simply one of those ones out there for decoration. But so yeah, that's your big picture over there on your main 7. Here's your VIX, which again, I don't see anything appropriate on the VIX to start screaming, you know, the bear market has begun. 2008 is here all over again. But I will again remind you that you are coming on 600 days since your last minus 10% correction, or sorry, since your last minus 20% correction. You're better than 300 days now going on since your last minus 10% correction. So you look at this however you want to look at it, but again, I try and make it simple. I try and make it easy for you so that you don't need to go there and work. You don't need to pay attention. You literally just put the trade on, leave the trade. The Yankees lose, but they still win the World Series. And the only reason they win the World Series is because they made it to the playoffs. And they make it to the playoffs because they win more than 80% of the games that they play. We're here to play. We're not here to fucking be right every single day. Enjoy yourselves. I am not going to get into what took place there with the doctor because I have a different video I'd like to do with that. But I will see you guys in the chat room on Monday. And again, put in the work, man. Put in the work. Figure it out. Put in the work. Everybody's here to help you. But you are the one who has to put in the work. Or else go look at your wife. Go look at your kids and say, we're going to be broke. And just admit it to them.
Wow.